They can imitate you, but they can't duplicate you. Cause you got something special that makes me wanna taste you. I want it all day long. I'm addicted like it's wrong. I want it all.
Under a double entry, an account will be written on the left side if it's a debit, and on the right side if it's a credit. To find out if it's a debit or a credit account, determine the conclusion.
There are 6 to choose from. It will be a debit account if the asset and expense titles increase, while the liability, capital, and income titles decrease.
For it to be a credit account, liability, capital, and income titles have to increase, while assets and expense titles decrease.
These are the transactions given the month of December 1998. December 3, borrowed money from the bank worth 20,000 pesos. This is an increase in asset that is equal to increase in liability. The assets are cash, which is plus 20,000, liabilities accounts payable plus 20,000, and capital stays the same. Assets is the debit, meanwhile liabilities is the credit. December 8, invested furniture worth 5,000 pesos in the business. Increase in asset is equal to increase in capital. Asset is furniture plus 5,000 pesos. Liability is the same. Capital is investment worth 5,000 pesos. Asset is debit and capital is credit.
On December 12, we purchased equipment for 7,000 pesos. This is decrease in one form of asset equals increase in one form of asset. Decrease because we bought the equipment for 7,000 pesos, so that's minus 7,000 pesos. But it's an increase in asset because we obtained the 7,000 pesos worth of equipment. So thus, it is balanced because nothing is gained or lost because it's just the same. Just took it out.
So for December 17, we have the transaction withdrew cash worth 2,000 pesos for personal use. And the equation for this is assets is minus cash, so that's minus 2,000. Liabilities stay the same, and capital is minus 2,000 because that's a withdrawal, that's personal use. And it's balanced because this is credit, decrease in asset, and decrease in capital is debit.
December 20, issued a promissory note to the bank. See the earlier transaction on December 3. This is decrease in one form of liabilities is an increase in another form of liabilities. Minus account payable, that's 20,000, and plus notes payable, 20,000. Your accounts payable is a debit account, while the notes payable is a credit account.
For December 27, we have the money borrowed from the bank, and that is decrease in assets equal to decrease in liabilities. Decrease in assets, that's minus cash, minus 20,000, that's a credit account, and decrease in liability, that's minus notes payable, minus 20,000, and that's a debit account.
I want it all day long.
What you gonna do with that design?